business news, we're news for business people.
Hello and welcome to Bloomberg Went Live and you're watching Trendspotting. I'm Navneet Saluja D'Souza.
I'm Agam Vakil, and in the next 30 minutes, we deep dive into specific trends in the markets to draw our key takeaways and its implications for investors. First, the headlines. It's a strong start to the trading week. The Nifty scales 10,600 mark, thereby posting new record highs. And JSPL gains for the third time in 4 sessions after it plans to raise close to 3,000 crores via various methods. And Idea Cellular and Bharti Airtel are seeing deep cuts after Reliance Jio comes out with cheaper tariff plans. And Sun Pharma is the top gainer on the Nifty after reports suggest that its Halol facility may be inspected by the US FDA in February.
All right, let's take a look as to what's happening with the markets currently. Well, it's a great start to this new week as Nifty's conquered another psychological level of 10,600. And the good news is that it's been able to sustain above that mark of 10,600 so far. So currently, Nifty is trading with about gains of 60 points. Bank Nifty, which was underperforming the Nifty, has also gained momentum today. That's trading above the mark of 25,700. But the key thing is if the Bank Nifty will be able to, cross this all-time high levels which were seen in the month of November, and 26,000 is a key resistance for Bank Nifty. But what is outperforming is once again the broader markets in today's session. So if you pull up the small cap or the mid cap index of National Stock Exchange or of BSE, both of them have seen gains of between 8/10 or 9/10%. So good gains for the mid cap and the small cap index. Just a word of caution, the India VIX since the morning session has been trading in the positive territory, and currently that trades a day's high around 4.5%, which tells you that there could be some sort of profit booking that one can expect in today's session, or at least in the near term. All the sectoral indices trade in green today, so your biggest gainer is the Nifty Pharma Index, and also the Nifty Realty Index continues to do well. Let's just pull up the contributors list among the Nifty constituents and check which are the stocks which are doing well, or rather which are contributing the most. ITC, Infi, ICICI Bank and Reliance Industries are contributing the most, but what's capping the moves on the upside are the likes of Bharti Airtel, HDFC Bank, Vedanta as well as Asian Paints. But Agam, what about the broader markets?
Again, Navneet, looking good as far as your advanced decline ratio goes. We're looking at good gains in something like Mahindra Financial Services, which has advanced by well over 6% for now. We're looking at good gains. Actually, it's looking flat right now, but the other stock I did want to pull up was Wockhardt. And Wockhardt, of course, has moved up substantially. We were discussing Wockhardt earlier in the day as well, where there has been a lot of longs building up in that particular space. We're looking at gains in Indian Hotels, IDFC Bank, as well as Reliance Power, among many others. On the losing end, some weakness coming in Crompton and Greaves and Reliance Communication, but on the whole, momentum with the gainers once again, Navneet.
Okay, that's about the markets, but on Trend Spotting today, we analyze whether there is more steam to the Nifty rally using technical indicators. We also analyze strong third quarter from Goa Carbon with its management. And telecom stocks are cracking post Jio's latest tariff plan. We get you analysis on the same. Well, first up, our first trend is on the markets today, which are trading around the all-time high mark. So is there more legs to this Nifty rally? Jayesh Khilnani joins us with an interesting analysis on the relative strength index. Jayesh, over to you.
So Navneet, as of Friday's close, there have been 16 continuous sessions wherein none of the Nifty 50 stocks have been oversold. So you can have a look at this end of the chart wherein it shows that 16 sessions there have been 0 constituents that have been oversold. Now let's backtrack this to somewhere in July when we saw a similar session playing out. So we had 17 sessions in the month of July where we saw that 0 Nifty constituents were oversold on the relative strength index. Now, on the other hand, what happened post this 17 session was that the Nifty saw a 4.5% decline going into August. So can we see something similar playing out in current market situation? Let's analyze how the overbought levels were currently and back then. So right now you can see that the number of stocks or the percentage of stocks in the Nifty 50 that are currently overbought is in the range of 2 to 5%. So not many cues coming in over there. Now go back to July and you can see that these red bars, which indicate a high number of members of the Nifty 50 which were actually overbought, that was in the range of about 20 to 25%, and most probably that led to the market falling by about 4 to 5% in the month of July and August. Now similar cues cannot be seen in December, Jan, and unlikely that we will have these stocks going up. So market correction only happens when the stocks are overbought, and currently we do not have that particular situation playing out on the relative strength index.
Thanks for that, Jayesh. Of course, there's some very interesting cues there when it comes to the relative strength index. And this is, of course, as Jayesh may have already mentioned, it's a very popular technical tool that a lot of those analysts use for their daily and to a certain extent also weekly as with respect to whether or not you can see the stock move up and down. That said, there are still a few stocks that I did want to point out, and as I was mentioning, is the pharma pack, because not only have we seen gains in Wockhardt, we've also seen gains in Sun Pharmaceuticals. And, this is, of course, building on the news that we've had when it comes to developments around Halol. Let's also take a look at some other pharma names such as Dr. Reddy's. We've had, some strategies initiate on longs, towards longs, and we have another 1% gain coming in as far as Dr. Reddy's is concerned. So on the whole, we're looking well when it comes to the pharmaceutical space. On the losing end, of course, we are looking at some amount of weakness in the telecommunications sector. So we have weakness in Idea Cellular as well as Bharti Airtel. Both these counters are looking at fresh shorts building in, even in the futures and options space. So, mixed cues coming in there. And while it's a good day for the pharma space, it's not such a great day for something like a telecommunications sector.
Well, that's right. And we'll discuss that theme of telecom in details during the show. But let's focus on the broader markets. And before we go to our analyst, I just want to highlight the rice stocks which are doing well from the broader market. So the likes of LT Foods, Kohinoor Foods and BSE listed Chamalal Setia, all these counters have been trading in the positive territory. And KRBL, which was so far trading in the red, has recovered from its day's low levels and is now quoting in the green. Well, there was some bit of news that the basmati prices have gone up, but we'll try to get in touch with the managements to confirm that news. But moving on, we were talking about the broader markets which have been the subject of focus throughout 2017. The mid-cap and small-cap index has outperformed the benchmark indices. What are some of the top picks in this space? Let's get in touch with Avinash, Gorakshakar, Head of Research at Joindre Capital Services, is joining us on the show. Hi, Avinash. Good morning, and thanks a lot for joining us. We've seen good outperformance in 2017 from the broader markets, and actually the trend is continuing so far in 2018. First up, I just want to get your view. Do you see more froth in the broader markets, or there is some genuine, buying which has been witnessed in a couple of pockets? Let's say we've never seen the paper, sugar stocks doing well, which have started to pick up steam now.
No, I think the broad level of the markets possibly could remain now in a fairly, kind of a narrow range. I think we have hit a new high. But I think clearly in terms of sectors like automotive components, paper, sugar, you'll see a lot of stock-specific activity, where the earnings story continues to be, extremely strong, both led by domestic and global kind of headwinds. And I think it's going to be more of a stock-picking market. I think the broad, large caps may not show a very big kind of upside, from these levels. But in the small caps and in the mid caps, I think there is still definitely a lot of headroom where, you could possibly get companies quoting at reasonable valuations and where the earnings story continues to look strong.
Avinash, good morning. Last Friday we were also discussing the kind of moves that have been coming along for micro cap stocks. That is, market capitalization of much less than around 200 crores. And a lot of these stocks involve, names like Gallant Ispat, Ludlow Jute, Orient Green, Panasonic Carbon, Nagarjuna Fertilizers for that matter. My question to you then is that a lot of these stocks, to a certain extent, are moving up on account of euphoria. What would you advise investors and traders out there when it comes to dealing with these stocks, considering there has been such an amount of appreciation in just 5 or 6 days?
No, I think, Agam, your point is right. I think whenever we see a very sharp rally in such kind of stocks in a few days or weeks, I think it's better to be a little cautious. And I would also strongly advise that, unless and until you get a proper kind of research done on these stocks, I think, in most of these stocks, the liquidity factor is extremely low. And that is one of the major reasons for the stocks to actually move up quite significantly. But I think there have been some noticeable cases, as you mentioned, Gallant Ispat, or for that reason, a Gloucester. I think these have been, stories which have been largely ignored for a long time. And, the kind of market cap these companies trade, I think most of the investors who get into these are basically the informed circle of buyers, typically not the retail, the mass retail as we know by, the definition. And I think it's always better to do a little bit of groundwork as to know how the sector is going to perform. How strong the balance sheet is, what is the management credibility? Because in these companies, corporate governance and corporate transparency is something which is really unheard of. So I think it's better to, take a stock-specific call on a case-to-case basis rather than taking a blanket call that everything which looks, small and which, moves up very fast can be an attractive bet. So I think it's, it's going to be a very selective kind of exercise if one were to, take a call on these kind of stocks.
Well, Akam, particularly jute stocks, there was some, development which came in last week where the Cabinet Committee on Economic Affairs had extended the mandatory packaging of food grains and sugar in jute bags for the year ending June 2018. I don't know if that was a backdrop of why in the last 7 to 8 sessions these stocks have been doing well. But Avinash, in today's session, we've also seen some buying into, a couple of the rice stocks, LT Foods, Kohinoor. All these stocks have been doing well. Not only now, actually in 2017, we've seen a good run-up from KRBL. Even LT Foods has given you good returns, and that was basically on back of higher basmati prices as well. Do you see any sort of value in these stocks if, one were to buy at current levels?
See, I think in terms of the rice stocks, definitely the headwinds seem to be quite positive. I think basmati prices have been firm of late, and most importantly, I think most of these companies would obviously benefit from the fact that, the last year before FY17 was not a very good year in terms of the basmati selling price. So to that extent, I think, this upside in these stocks in the near term could continue. But I think here, clearly one should bet on the market leaders like something like an KRBL or maybe a LT Foods, Kohinoor Foods, where basically not only the business but even the balance sheet structure appears to be pretty, reasonably good. So if one were to take a slightly medium-term view, I would not be surprised that you could possibly see a good run-up ahead of the budget. And clearly, with policy initiatives now being positive for these, for the sector, you could possibly see a lot of action at least in the near term. Longer term, I think how the monsoon performs, how the cost of raw material for these companies pan out is going to be very important, if we were to see a continuous re-rating here.
Okay, Avinash, so you've spoken about two agricultural facing sectors, so to speak, when it comes to potential gains from here. That includes rice and jute. Are there any other corners in the mid-cap or the small-cap space that you are looking at opportunities with, say, the year of 2018, which could lead to substantial gains from these levels as well?
Yeah, I think Gaugam recently did a research on a company called Lasa Supergenics. In fact, it is a company which was a part of Omkar Specialities and which now is independently listed. It's basically into APIs which go into animal healthcare products. And this company can be compared to, players like Hester Bio, Sequent, or maybe a NGL Fine. And in terms of the operational financial performance, this company has done remarkably well. About 10 years back, the company's turnover was hardly 10 crores. For March 2017, they ended with a top line of 200 crores and a PBT of almost 27 to 28 crores. So here possibly the story could emerge stronger. The animal healthcare business is growing rapidly. They have a large exposure to the dairy and to the to the cattle as well as to the sheep sector. And clearly, from a mid-cap perspective, Hester Bio trades at a market cap of almost 1,400 crores. Sequent trades at a significantly higher market cap, and this is a company where we could possibly see a very strong earnings growth of 25-30% for the next couple of years, and which trades at a market cap of below 400 crores. So this could be a good opportunity for people who have a slightly higher risk appetite. But here, possibly the growth story could kick in because the sector prospects definitely appear to be promising.
Okay, Lasa Super Generics is the top pick from Avinash. Avinash, thanks a lot for joining us today and taking us through your views in the broader markets.
Well, there you have it, guys. That's the view on the broader markets. But we'll move on. And it's been a very, very strong third quarter for Goa Carbon. This is the company where the earnings came over the weekend. And the stock is, of course, currently locked in an upper circuit. To discuss the quarter gone by, joining us now is Mr. Srinivas Dempo, the chairman of Goa Carbon. Mr. Dempo, thanks for joining us. Let me just start off with the fact that we have seen such a big gain in your top line itself. If you could start off by telling us and giving us the factors that you attribute to this quarter's performance.
Sure. Very good morning to all of you. First of all, the reason that we have shown such good performance is due to two factors. One is, of course, the strong demand from the aluminum companies. I think both in China as well as in India, the aluminum production is on the rise, and that is the reason why CP coke demand is so very high. The other thing is the material that was earlier exported from China to India, in view of their own requirement as well as certain plants closing down due to various factors such as pollution, the capacity has got rationalized in China. So these are the two factors that we find that the demand for CP coke, which is the main product of Goa Carbon, is so high.
Sir, just want to get a check. A good jump on the top line. How much will you attribute this to price-led growth, and how much will you attribute it to volume-led growth?
I'll tell you our volumes from the last quarter, which was 61,000, is gone to 63,000. As well as the selling price has gone up from about 24,500 to almost 29,500. So we see a great jump in the selling price, as also a marginal increase in the production.
What about your input cost? That too has gone up for the quarter. What's the outlook there?
Sure. The input cost is also gone up. As you rightly observed, the green coke prices have been going up. As a result of, again, demand from the CP coke industry. But the good news is that we have been able to sort of pass on these increased costs to our end buyers, which have a very strong demand for the product.
All right, so Mr. Dempo, there is also the case where we've seen a sharp reduction in your finance costs and higher other income. I know this question has two parts to it, but if you could also address both these variables and could tell us about more updates and give us more updates with respect to both these issues.
As the first issue, as you've rightly observed, we have been able to reduce the finance cost, primarily because we do buy raw material over the longer run, as well as we buy some raw material in the spot market. Because the inflows, cash inflows have been so strong, we have used the cash to buy raw material at very attractive prices whenever we can. And that has reduced the finance cost to a very large extent.
And will it be correct to say the current debt which you have is more of working capital debt, or it's more of long-term capital?
It's all working capital debt. We have zero term debt.
Okay, so are you looking to raise then more funds via this route?
For the current operations, no,
Okay.
because we can manage through our fund flows at the moment. So I don't think the debt should go up further because of the current operations.
Okay, but since you mentioned that demand has been higher, considering there have been capacities shut down in China, which has led to higher demand and higher prices for this financial year. What's the capacity utilization that you currently have, and are you looking to increase your capacity?
I wish we had more capacity at the moment. We are currently running close to 100%. We actually ran 96%, and the reason that it's 96 is only because we had to take a plant shutdown for one of our plants, and that's the reason it's 96, otherwise it would have been 100%. So currently the demand is so strong, and we have a strong order pipeline for our major customers. Most of the volumes that are produced are sold immediately.
So if I could also quiz you on the realizations per ton in the quarter, and if you could give us an outlook in terms of realizations going ahead.
Realizations for the quarter is almost close to 30,000 tons, which was about 25,000 tons last quarter. So we have seen a good increase of 5,000 rupees per ton. As you said, the cost of goods also has gone up, but that has not gone up to the extent of the realization in the sale price. Looking into the fourth quarter, we also again have, as I said earlier, a very strong pipeline of orders. We have close to about 50,000 tons of orders. And that too when, we are yet to negotiate for the month of March. So basically we are talking about 50,000 tons till February. And we are currently at about close to sales of about 160,000 tons as of the 9 months. So if we add 50,000, it should cross 2 lakh tons. And our rated capacity is about 2,20,000. So you can imagine that we are, producing and selling to almost full capacity.
Okay, are you able to meet the demand which is there in the market right now?
Currently, to the extent that we can, yes. But as I said earlier, if we had more capacity, yes, we could have looked at a few export, tonnages, as well as we could have increased our sales to our, current customers.
Just last question from my side, Mr. Dempo. Your current tax has been higher for the quarter, and the reason for the same that you've highlighted is that includes tax for earlier years as well, amounting to 4.4 crore rupees. Just want to get a check. In the coming quarters, is there more tax of earlier years which still has to get accounted for?
No, most of the earlier year accounts have the tax part has been taken care of. So we have adequate provision there, so there won't be any past tax effects. But going forward, as you said, looking at the profitability, we will continue to pay taxes to that extent.
All right, Mr. Dempo, we leave it at that. Thanks for joining us and giving us an outlook on your earnings as well as, of course, the outlook on the business going forward. Plenty of takeaways from the conversation, but when it comes to Goa Carbon for now, of course, reacting very positively to its earnings. We'll be watching out for more developments on this counter. But moving on, it may be good news for some telecom users at the start of the new year. Reliance Jio has come out with its new tariff plan while also offering additional data. Samit Sarkar is here with more details. Samit, what do you have for us?
So Reliance Jio has revised its tariff. Now they're offering 50% more data in their new plans and will charge 50 rupees less on their existing prepaid plans. Now these plans will be effective from 9th Jan. So if you see the new plans, for the existing plans are offering 50 rupees discount. So there are 4 plans, 199, 399, 459 and 499, where they'll be giving a 50% discount. That means that the effective change in price ranges have come down by 10 to 25%. Other than this, there are 4 new plans that they have come up with, which will be offering 1.5 GB of data per day and at a cheaper price. So there are 4 new plans, that is 198, 398, 448 and 498. Now as they are offering more GB of data per day, the effective per GB cost has come down in the range of 20 to 33%. Now Reliance Jio says that these new plans have been introduced to support the high data consumption of their customers, and the 1.5 GB data per day plan offers data at around 4 rupees per GB. Now Credit Suisse says that the tariff cut reflects Jio's primary focus is on gaining market share and not on profitability. So after these plans, let's see how Jio's plans stack up against its peers. Now if you see, Jio offers 2 plans which have a validity of 28 days, that is 149 and 199. Airtel and Idea have 199 plan offering for a validity of 28 days. Airtel and Vodafone have a 349 plan, while Idea separately has 309 plan and 357 plans. Now this differs according to the data that they are offering. But if you see, the plans that Jio is offering is the cheapest on the street. And why is it cheapest? Because the effective cost per GB is very cheap. Now for 149 plan, it is 5.3 rupees, which is at a discount of at least 15%, while for the 198 plan, the per GB cost is around 4.7 rupees to the customer, which is at a discount of 24%. For higher validity plans, if you see, Jio has plans which ranges in 349 to 498, which depends on the validity and the data that they are offering. Now Airtel, Idea, Vodafone also have plans which are trying to match the validity and the data that is offered by Jio, but they are not able to match on the cost. Now if you see, the Jio's costliest per GB plan is offering data at rupees 5 per GB, while the cheapest that is offered by the competitors is at 5.5 GB. So you can see the stark difference. This is the costliest that Jio is offering, and this is the cheapest that the competitors are offering. So you can clearly see the stark difference that is there, and as of now, Jio is offering the cheapest data on street when compared to its competitors like Airtel, Vodafone and Idea.
So, Amit, any room for Airtel and Idea to reduce the tariff plans then?
So earlier we have seen this trend. Whenever Jio has reduced its rates, Airtel, Idea and Vodafone have also followed up. So we can expect new plans coming up from the competitors in the...
I think start of this year, Airtel had just increased the validity as you mentioned, but they've not reduced the tariff plan per se. All right, thanks a lot, Sumit, for joining us. And clear impact today has been seen on the stock prices of Bharti, Airtel and Idea, which have reacted negatively to that news, where Jio has revised its tariff plan. They've reduced it by almost 50 rupees. As you can see, Bharti Airtel is under pressure with cuts of almost 4% in today's trade, almost closer to 6.1 million shares that have been traded there. And Idea too has seen a bit of build-up on the short side, down almost 6%, trading above the mark of 100 at around 108. All right, then, what else is moving in the markets today? Yash Upadhyay joins us with the list of the stocks. Yash, over to you.
Thanks for that, Navneet. So we start off with Jindal Steel and Power. The stock had gained as much as 12.5% today after the company's chairman Naveen Jindal said that the company is planning to raise as much as 1,000 crore rupees via the QIP route in February. The proceeds of the QIP issue would be used to repay some of its debt and clear some of its dues relating to its working capital and capacity expansion. Also, the company plans to raise another 2,000 crore rupees via the listing of its Oman business on foreign exchange. So the street giving it a big thumbs up. Goa Carbon is also up in trade today. In fact, it is locked in a 5% upper circuit. We spoke to the management earlier and they had reported an extremely strong set of Q3 numbers. Net profit came in at 22.5 crore rupees versus a net loss in the same quarter last year. EBITDA too saw a 20-fold growth to 38 crore rupees versus just 2 crore rupees in the same quarter last year. Sobha Realty had gained close to 15% today on the back of its robust sales data in the third quarter. Q3 new sales volumes grew by as much as 52% to a little over 9 lakh square feet, while its new sales volume saw 64% growth on a year-on-year basis to 610 crore rupees, which is its highest in the last 11 quarters. Realization per square feet also saw an 8% growth on a year-on-year basis to almost 6,500 rupees versus 6,000 rupees per square feet in the same quarter last year. JP Infratech is another stock which is making big moves, gaining close to 10% today on the back of ET reporting that Tatas and Lodha are in talks to take up stake in the company. CMEC Limited is another stock which is locked in a 5% upper circuit today. So a couple of stocks which are locked in an upper circuit, with this one saying that it has entered into a contract with GOPL Offshore for the charter hire of its vessel CMEC 3. Now the contract starts from January 5th, 2018 and the total value of the charter hire is about $2.5 million. HCC had gained another 5% today after the company's joint venture with Al Farah Projects said that it has received an order worth close to 500 crore rupees for the Pune Metro Rail project. Now they have received a similar order earlier for the Pune Metro Rail Project 1 and the company's share in the joint venture is about 51%. And lastly, we have Gitanjali Gems. The stock had gained close to 4% today after Morgan Stanley France bought close to 1% stake in the company via bulk deal.
Well, so a lot of stocks out there which are gaining on the back of news, and of course 2 of them were on account of the increasing and improving quarterly updates that we've seen. Thanks a lot for that, Yash, for bringing that list to us. But with that, it's a wrap on this edition of Trend Spotting. Up next is Hot Money, so keep watching Bloomberg Quint.